Hello, good morning everyone. Hope you all had a good night's sleep. We'll start with what we did last night, the trade we placed last night. We established that the pound dollar had formed a resistance in the market at that point. So the plan was to buy 2 points above the resistance, which we did at 16140, and the market took our order there about 10 past 1 in the morning. Obviously we're all in bed when that happened, and you can see, like we normally say, our first target is 30 points away. That was 16,170. So it just about got to the halfway point towards our profit target at about 205, and since then it's just been gradually coming down and it's just going sideways. And now that we're back looking at the markets, what you could do is reduce your risk by 10 points, which is what I've done. I've moved the stop to 16,130. So at this point, I'm just risking 10 points instead of 20. And I'll wait again to see if it gets to the halfway point. And then if it does, I will then move the stop to the opening level. So it's just in case the market decides to collapse, instead of risking 20 points now, I'm only risking 10 points. So that's a sort of compromise we'll do, because the market has already gone up towards halfway towards the target. Obviously, if you're up at 2 a.m. in the morning, which I hope you are not, not getting any sleep. But if you are up at 2 a.m. in the morning, yes, you could have moved your stop at that point to the opening level, and then you'll be out of the trade now. So if you're already out of the trade, we'll have a look at where you can place your trade this morning. But if you're still in this trade from last night, like I said, you move your stop just to about 10 points away from your opening level. So we'll move it to 16,130. So we're only risking 10 points at this stage. And if the market does go back to halfway towards our profit target, we'll then move it to the opening level then. But like I said, if you haven't placed a trade yet, we'll then have a look at the markets and see where we can place a trade. Okay. So as usual, we start with the economic calendar. And today is Thursday, the 11th of November. So there we go. We've got Thursday, the 11th of November. We had the Australian unemployment rate that came out at 12.30. But that's only if you're trading the Aussie dollar. But we are concentrating on the pound dollar and the euro dollar for the 2 weeks we're on. And all these reports are from China. Again, that doesn't affect the currency we're looking at. And here at 9 o'clock, we have the European Central Bank, which publishes its November monthly report. That's a report of medium importance. So that might have an effect on the euro-US dollar. But we'll see at 9 o'clock. But it's not a report of high importance, so that shouldn't stop you trading. And there are no reports all day till 11 p.m. at night, which is, again, a report of low importance. So today is actually a good day to trade because there are no reports of high importance coming out, which will affect the markets we're concentrating on, which is the pound dollar and the euro dollar. But don't forget, the G20 meeting is going on in Seoul. So anything, well, we hope nothing drastic happens while the meeting is going on. But it's just to be aware about the meeting going on in Seoul, the G20 meeting. And, you know, it's just good to keep an eye on the financial news and be aware if anything drastic happens which might affect the market. But again, because we're sticking to our trading plan anyway, and we have stop losses, it won't make such a huge difference to us. But yeah, it's always good to be aware about what's going on in the financial world. Okay, and like I said, for that you can go to MarketWatch. You can go to marketwatch.com or the BBC News, any financial website. There are so many of them around. Bloomberg, whatever you like. There's so many financial websites where you can get up-to-date financial news. So it's just good to keep an eye on what's going on in the financial markets. Okay, so barring anything drastic happening from the G20 meeting, there are no planned reports of importance, so we'll go straight to our charts. So we'll start with the Euro-US dollar. So we'll start with the 1-year daily chart and have an overall view of the market. So we can see that's the 1-year daily chart. You can see the market was initially uptrending with 23.6% retracement and came straight back down. You can see where it broke the moving average 50 at that point, and it's going back up. So again, from a swing trading point of view, you can buy when the market goes back up to the Fibonacci retracement at 23.6% retracement. Again, you could have sold yesterday when it broke the moving average 50 with a 100-point stop loss, but that probably would have taken you out. Let's see, 826. Yeah, so you would have been taken out and you'd have lost 100 points there. But you can still sell again at just below the moving average 50. Again, like I said, this strategy you only use if you're used to using it. And again, always remember that no strategy is 100% accurate. You're never going to get it right all the time. So certainly I'm used to using the moving average 50. Sometimes it works, sometimes it doesn't work, but it doesn't stop me from using it because it's been very, very profitable for me. So from a swing trading point of view, you can either use the moving average 50, you sell just below the moving average 50, you can buy at the 23.6% retracement or sell at the 38.2% retracement. So that's the swing trading opportunities. Let's go to day trading. So we'll come back down to the 2-day 5-minute chart. As we can see, the market is a bit haphazard. It initially went up in a haphazard way, came back down, looked to be going sideways, then fell, and then rallied straight back up, and then starts going sideways again. So from the Euro-US dollar point of view, it's actually quite straightforward today because you can see this most recent sideways trend is just between the first resistance and the pivot point. So the best thing would just be to buy just above the first resistance at 13,845 and to sell just below the pivot point, and the pivot point is at 13,757, so we'll sell at 13,755. There we go. So that's where you should place your pending orders if you're not in a trade at the moment. Obviously, if you're still in a live trade with a pound dollar, like I said, you make sure you don't place any other trades and just wait to see what happens with your current live trade. But if you're out of that live trade or you did not place that live trade last night, then you can place a pending order 2 points above the first resistance and 2 points below the pivot point. So that's for the Euro-US dollar. Now I'll come to the pound dollar. Again, we'll start with a 1-year daily chart. And as we can see, the market too has been trending up in a haphazard fashion. It's getting close to the next retracement. So again, from a swing trading point of view, you can either buy at the 38.2% retracement if it goes back up there. You can sell just below the moving average 50, or wait till the market gets to the next retracement to sell from a swing trading point of view. Let's go down to the day trading. So from a day trading point of view, again, we can see that the market started going up from yesterday afternoon, and it's gone sideways, and it's starting to slowly go up again, and now it's coming back down again. So there's really no descent pattern to the market. So again, if you're not currently in a trade, or if you're in the current trade and you get taken out, then the best place to place the trade will be similar to the Euro US dollar, 2 points above the first resistance at 16,186, and 2 points below the pivot point at 16,070. And then in between, you just keep out of the market. So that's our plan for today, and this will be our pending orders.